Chipotle mixed expectations in its first quarter results as the chain navigated lower consumer confidence and President Trump's trade war. Joining me now is Chipotle CEO Scott Boatwright. Scott, thanks so much for coming on.
Hi, Brooke, and thanks for having us on today.
Scott, let's just set the scene here. The Conference Board's Consumer Confidence Index showed that consumers' expectations about the economy hit a 12-year low. The IMF lowered its expectations for U.S. growth, and all major indices are down roughly 2% this month, if not more. Is all this noise what led to a major slowdown in same-store sales growth for Chipotle?
We certainly think so, Brooke, in large part. We saw the underlying kind of trend step down around the February timeframe. That continued into March for us. As we look at our consumer visitation study, and we talk to consumers broadly about what is causing them to be on the sideline in this economy, it's really trying to save money, uncertainty around what's going on with the global economy, certainly concerns around eating out more or eating at home more often versus eating out. As we dig into specifically what's going on with the Chipotle consumer, we're not seeing a loss of customers. What we are seeing is a convenience challenge, meaning we need to build more restaurants as quickly as we can to get to our 7,000 restaurants in North America.
Now, Goldman Sachs wrote in a note this week that as tariffs go into effect and consumers start to see prices rise on everyday goods, that it now expects growth to slow down from there. A bowl with guacamole, my go-to order, half premium. It costs about $15 here in New York. How does Chipotle compete in this sort of environment as more consumers are turning to fast food?
Chipotle today, the average cost of a chicken burrito or a chicken bowl is still under $10 nationally, Brooke, which we think is still an extraordinary value compared to our peer group. We are a 10 to 20% discount to QSR today, and oftentimes a 10 to 20% discount to our fast casual peer group. So we think about value differently, and we think about value as really high quality ingredients delivered with great classic culinary techniques in abundance and at affordability and a price point that is unmatched.
But Scott, we did see foot traffic drop 2.3%. That was the first decline since 2022. Is that enough to get consumers back in the door here?
We believe so, Brooke. And so we're going against some really tough compares this quarter. As you probably well know, weather has been a challenge for us in the first quarter. The shift of Easter moving 3 weeks later in the year is a challenge for us. Typically, we see the boom or the boost of burrito season happens right after the Easter holiday, which we did see a nice pop in our business on Monday following the Easter holiday. So it gives us a lot of confidence that our strategy is working. We're meeting the consumer where we are. Given we took a look at our brand tracker, which measures how we compare against our peer group in 20 to 25 different perceptual drivers, I'm happy to report we hit a record 15 top 3 categories this year, which shows us that we're improving in a lot of brand metrics. 2 that I'm most excited about is cares a lot about the customer and great customer service. We showed up in the top 3 of those categories for the first time.
Scott, are consumers pulling back on ordering sides?
No, we're not seeing side attachment per se drop. What we are seeing is the frequency drop. So consumers are still spending. They're still getting their favorite sides, their add-ons, whether that's guac or our delicious queso or chips. Our chips are made handmade every day in the restaurant. They're still an incredible value as we see them. So we're not seeing attachment slip. We're just seeing frequency of our customer. Again, we don't have a customer issue. We have a frequency challenge.
I do want to talk about that guacamole. We did see food costs increase during this quarter for Chipotle due to inflation. We know that about 50% of Chipotle's avocados are sourced from Mexico, of course, exempt right now with a USMCA agreement. But there's so much uncertainty day to day. Will consumers see higher prices for guacamole?
Not anytime in the near future, Brooke. Our position today as it stands, I said this earlier in the year, is that we are not going to take price in this environment, given where the consumer is, until we understand what's actually happening with tariffs. We need to understand which components of the tariffs today will be transitory, which will be permanent, and we'll take a pricing action when it's right and appropriate, Brooke, but it is not in our purview today and not on our radar anytime in the near future.
Your CFO did tell investors last quarter that if there was a permanent hit to the business this year in the form of inflation, that you guys would consider pricing. It sounds like potential pricing is still on the table if these tariffs stay in effect. Is this a permanent hit on the business, and do you raise prices from there?
We would have to evaluate where we sit when that actually happens and we understand the tariff impact. Once we have that understanding, we'll take a hard look at where the consumer sits today. We have pricing power at Chipotle that I believe is unparalleled. And we view that pricing power as an asset. And we can choose to spend that asset when we want to, given the strength of our balance sheet and the strength of our economic model that gives us the opportunity to be patient, do what's right for the consumer, do what's right for the brand, and make those decisions at that moment.
So, Scott, to be clear, even though you did see same-store sales decline, you did see foot traffic decline, you still think that Chipotle has pricing power here?
I absolutely do, especially given the value as it relates to our competitors within the space and how we think about pricing in total. I know many of the brands that are competitors within our space have franchise communities that take action on pricing at will. We, being wholly owned and company owned, both here and in Western Europe, control our pricing strategy. We control how we create value for the consumer, and we don't take that lightly. And we'll lean into the right decision and the right action for the consumer at the right time.
I do want to quickly hit on tomato salsa is also in my go-to order here. Mexican tomatoes are expected to see a roughly 21% tariff starting mid-July. How much of a headwind is that for your business?
It's small numbers in basis as it relates to basis points impact to margin. And again, something we can absorb if those tariffs go into place, and something we can price against later down the road when the consumer's in a better place. We expect this year to have somewhere in the kind of low single digit commodity inflation as well as labor inflation. We have said historically our pricing actions have often been only to offset inflation that we're seeing in the business, not for margin capture. And so we'll look for other offsets within the P&L to offset some of those margin impacts first before we lean into pricing as a lever.
Looking out, you do expect same-store sales growth to now come in the low single-digit range. That was lower than your previously set expectation. Why are you doing that, Scott?
Just given what we experienced in Q1, the tough compares we're seeing in Q2 today, we do have, based on our forecast, we will return to positive transactions in the second half of the year. We also have several activities that as it relates to what I call the consumer flywheel. So think operations, digital, and marketing. We're going to lean into the consumer in a more meaningful way this summer as it relates to marketing and digital ad spend. Typically, it's a month where we don't spend as much as we do in the other parts of the year, so think spring and fall. And we're trying to target our consumer to remain relevant throughout the summer months. And the summer seasonality has been a step down in the business for us for the last couple of years. So we're going to lean into streaming channels, social media channels. We're going to lean into this idea of using our most influential Chipotle users and how they Chipotle on a new campaign we're bringing forward. We're going to lean into innovation as it relates to the menu as well. So you could see a new sides or a new dip this summer as we think about how do we stay relevant, visible, and loved by the consumer throughout the summer time frame. I have a lot of confidence in the back half of the year as it relates to the LTO that we'll bring into the fall. So I have confidence we can get back to positive transaction and positive momentum in the second half.
New LTO, new dips. These are all things we're excited for here, Scott. I do quickly want to hit on the stock price. Investors are weighing the potential risks like that exposure to avocados, the intense competition, and then this overall economic environment that we're seeing. Shares are down roughly 19% year to date. What is your message to investors here?
I would tell you that the strength of the brand has never been better, Brooke. I've been here 8 years now. We are absolutely on our front foot as it relates to operational, as you think operational ability. If you think about culinary, we're delivering world-class culinary across the system today. The throughput numbers continue to improve. Our customer experience numbers, all metrics we look at continue to improve. We're delivering better in-restaurant experiences. The marketing calendar slated for the back half of the year and into 2026 has never been stronger. We continue to innovate in our digital properties as we think about customer journeys, individual personalization, and how we bring that experience in a frictionless way to the digital consumer. So I have a lot of confidence in our strategy, how we move forward as a brand, and I think there's never been a better time to be a part of the Chipotle family.
Scott Boatwright, Chipotle CEO, thanks so much for taking the time today. Appreciate it.